Hello and welcome to the latest short presentation on the past performance of the Woodruff Financial Planning investment portfolio. So this is designed as a quick run through as to how our investments have performed over the last 5 years or so, to give you a flavour as to how your investments might perform if you work with us. Data is correct as to the 30th of June 2018. So just before we get started, I just want to give you a flavour as to how we use model portfolios in our practice. Basically, we have a variety of risk-based investment portfolios. The idea is that when you come in as a new client, we have ready-made models that fit certain circumstances which we can adapt to your situation. So we run this data every 3 months, so we update the portfolios every 3 months, and the idea is that we'll set you up in a portfolio that matches the goals that you have regarding growth, income and the risks you want to take. The important thing is that we then review these portfolios against your own portfolio when you come to an annual review. So we're going to compare the best we can find on the market for the risk and the goals that you have against what you actually have invested in. Because of course your own situation will change from the technical ideal of the model, and you'll have different needs at different times. So it becomes an individualized approach with every single client. The most important thing to say about this information is it's not guaranteed in any way. We've used past performance of the models as they've changed over the past 5 years, but in reality the actual performance will depend on a variety of different areas, such as your own personal circumstances, how much you put in, the timing of your investments, your own tax situation, the charges of the investments that we recommend, which could be different to these, and there are other variables that should be taken into account. The most important thing is to say is that don't take this as advice. We would assess your individual situation according to your own individual needs. That's what financial advice is about, after all. Okay. So here's the model past performance. We've shown you a variety of different data points here, 5 different growth investment portfolios ranging from cautious to adventurous, and we've shown data over 1, 3 and 5 years. So we've broken that down into annualized and cumulative performance. The annualized performance is the average growth you'd have to get per year to reach the same cumulative growth over the period shown. So we'll display that as we go through. So here we can see the cautious portfolio, and I think one thing to point out is that these obviously go up in risk as they go through. So you can see a variety of different data points for each area here, and as they go up in risk over the last 5 years, so does the investment performance. If you look at the 5-year data figure, which I'll show you here, you can see that the average annual growth goes from 5.66% for cautious up to 9.09% for the adventurous. And the important thing to talk about is that you get greater returns on average over time because of the greater risk you take. And we've demonstrated that with the Financial Express risk score, which is a way of showing how risky that portfolio is, in their opinion, compared to the FTSE 100 index of leading UK shares. So as you can see here, broadly speaking, based on that scale, the cautious portfolio comes out at 38% of the risk of the largest 100 companies in the UK put together, and the adventurous portfolio comes out at 84%. Of course, it's not quite as straightforward as that. There's a variety of different areas to examine, but I think what you can see here is that on average, over time, based on the past performance of these models, you can see the greater returns that we've had over the last 5 years. Now, going back to what I said before about none of this being guaranteed, of course, that is gone, and that is based on what has been over the last 5 years. We've been on a pretty good run in the stock market with no negative annual periods. If we take any specific annual year in the last 5 years, none of those have been negative for the stock market. And of course, that has fed through into the returns of the portfolios. But what we're trying to do really here is give you a flavour as to how our approach has performed based on the risk that people have been willing to take over that period. But of course, in the future, it may look quite different to this. Okay, so put that into some perspective. Had you invested 5 years ago, which you didn't, but had you put an investment of £300,000 into one of those three categories there, and had you made the changes every 3 months that our model portfolio has done, which you didn't, this is what your returns would have been based on a straightforward modelling of investment performance. So we have taken into account some sample charges and obviously our investment charges as well, plus of course the growth figures that we have referred to in the previous chart. So the full methodology is on the website that accompanies this video, but there you can see that some sample growth rates had you invested in one of those three strategies. Now, of course, bear in mind that this is not guaranteed, but it gives you an idea as to how the different growth rates filter through into actual pounds and pence returns on your money over time. And so just finally, just to remember, this is the past performance of the actual models. There's no guarantees, the past is gone. Your situation will be different, but we have assumed charges, including the product and the advice charges. So we've tried to be as open about our investment performance as we can be, but basically what we're trying to do is show you how things may go if you go into these different investment strategies that we may offer. Of course, if you're interested in talking about your investments, whether you want to talk about what you already have or what you may plan to do, the first port of call is to have a conversation and to potentially review what you have against what we may be able to offer. Okay, so what you've seen in this video is just one part of the Prosper service that we offer at Woodruff Financial Planning. So just a brief overview of the Prosper service then. What we're trying to do is bring together two things. The first is a financial plan, which you've seen already in the video, and that will help you to get some clarity around the future. And we can also help you to manage any investments that you may you need to run, such as pension schemes or other types of invested assets. So the Prosper service gives you clarity around where you are now, with the idea of looking into the future to see where your money is going. So once you have that clarity, it'll give you a good way of visualizing where your money is going, and then we can start to look at different alternatives as to how you can make choices now that will have an impact in the short, medium and long term in your future. So it's all based around sensible, realistic assumptions, stress tested against realistic expectations for the future. When you have that clarity, you can then start to focus your attention and resources in specific areas, and this is where the different scenarios come into play. So we can examine as many different scenarios as are relevant to your situation, and examine how these different ideas may work out in practice. The ultimate goal is to aim to get you to a strategic overview and make the right decisions for your finances now and in the future. Really, with the main aim of the whole service is to give you financial freedom. So when you know that you've got some financial freedom in the future, you can start to relax and you can work hard on making sure that you live the life you want, and that means perhaps spending more money. So hopefully that's been of interest. We're here to help. If you need to speak to us about the issues in this video, please give us a call.